Now, Sven, according to the schedule, you were going to say, oh, and now it's time for Henrik to say a couple of words about the global economy and global megatrends.
Yes, it is.
Yes, it is.
We have been waiting.
Okay, thank you. Right, so now you have to deal with me until lunch. I was asked to say a couple of things about my views on the global economy, the things that I write about, and about where we are heading. From a business cycle perspective, well, you know the drill. It's quite pessimistic out there. Everywhere we see a decline in growth rates, all those leading indicators are declining. Obviously, we have other challenges as well. Some of them more worrying than others. I find it so fascinating. I mean, me and many others in this room, I'm sure Anders Borg will agree with this, we're focusing so much on the Brexit issue, and we've read all the articles and talked to people, and we don't know anything. Nothing, really. And then, of course, we have the president in the United States who wants to preserve his unpredictability. Another challenge, I think, is the tech boom in the equity market. I don't think that the equity market is overvalued from sort of a global perspective. The average sort of valuations are not that demanding. But, of course, you have, companies like this, Netflix, valued at around 120 billion US dollars. That is 1,000 billion Swedish kroner. PE rate of 120. Very easy to remember. $120 billion and PE rate 120. Netflix is doing good, doing good things. How many of you are Netflix clients? Of course you are. But contrary to many other services, you can very easily just dump this company. I mean, if someone else would provide some good TV shows for you, you would easily just say, okay, thank you. We will never ever pay more money to Netflix. I'm not saying they're doing a great job, but valuation stretched. And then of course, from a macroeconomic angle, it's a bit challenging with the debt. I heard someone on TV, an economist, saying that, well, we solved the debt crisis. Right. We solved the debt crisis by borrowing more money. That's how we solved the debt crisis. In almost all countries, apart from Sweden, where Anders Borg did a fantastic job, higher debt rates across the globe, and so we solved the debt crisis by borrowing more money. And also, we let the central banks buy or most part of the government bonds. So that's how we finance it. This worries me more than anything else. It will not lead to a collapse tomorrow, not at all. But it's something we should always bear in mind from an economic angle, that this is really a challenge in the long run. So how can we define the business cycle today, the situation we're in? I'm not going to bother you with too many charts. Some charts I will show you, just to reveal how purchasing managers react under these circumstances. But I was thinking about how can I picture the current economic situation? Well, I remember last year I went to Paldiski in Estonia. Do we have anyone from Estonia here? Okay, I love Estonia, for the record. Estonia is part of the book, a success factor through the digitalization of the society. But this particular seaside resort is quite depressing. So it can probably reflect the current environment. But let me just briefly go through some of those indicators that we tend to focus so much on. The Purchasing Managers Index. Every month, you ask purchasing managers in companies, what do you think about the current situation, about orders, and about the future? Long story short, going down. This is the US going down. This is the EMU going down. This is China, low. Japan, down. Germany, really going down, affecting the entire European economy, of course. And this is, of course, automotive, car sector, with accounting for almost 10% of German GDP, employing almost 900,000 people. And so with Germany accounting for around 1/3 of the monetary union's economy, this really hurts. And of course, the Germans, the car manufacturers, are really hurt by two things. We have Donald Trump on the one hand, and then all of us, the consumers, who are a bit hesitant because of what Connie was referring to, the great change in production from the car companies. So if we don't have the money to buy a Tesla, what do? We don't do anything. And that's really hurting the German economy right now. But from a financial market perspective, who cares? I mean, we used to believe in God, no longer, of course. Nowadays, we only believe in central banks. In the Federal Reserve we trust, or in the ECB, the European Central Bank. They make us borrow money for free, and that makes the financial markets happy. And that's why we see the equity market doing quite well. I mean, it's funny to see the German government was 3 weeks ago able to issue government bonds, that's the way they borrow money, a 30-year government bond at the bond yield of minus 0.26. Minus 0.26. That's a good business, isn't it? To borrow money, you get 26 basis points every year for 30 years until 2049. That's an amazingly good business idea to just borrow money. And you even have some of those companies that can actually now borrow money, not in 30 years, but a couple of years, and actually gain money. And this changes everything. Because many of you are economists, and you remember all the things you read you studied at university, how to discount cash flows and and you end up with some valuation model. But it's based on an interest rate that if you lend money to someone, you will get some more money back a couple of years later. And now with minus or negative interest rates, that's all come to something completely different. And now you have companies like Volvo. Volvo issued a 7-year bond paying 0.4%. That's the borrowing cost for Volvo. Congratulations. That changes everything, because companies usually do not collapse because of the lack of demand. They file for Chapter 11 because they can't meet their debt. With 0 interest rate costs, that risk suddenly disappeared. So what's the credit risk in an interest rate-free environment? But how long will we have this? Well, until central banks realize that inflation is dead. Because what central banks do these days is that they try to make sure that inflation is 2%. So everyone is sort of focusing on 2% inflation. That's sort of the good inflation rate, they think. But what if reality is different, and that inflation is dead, and that the normal rate of inflation might be 0 because of globalization, digitization, robots, automation? Maybe the natural rate of inflation is 0. I think so. I mean, what happens right now if you work at McDonald's, can you really go to your manager and say, oh, I really need a higher paycheck next month, when the clients are doing their job? And I mean, that's just one reflection of what's going on. You go to the supermarket, you do it on your own, the cashier is gone, you pay, you make the work, you make it everything by yourself. And just an illustration also of how you calculate inflation. In Sweden, for example, the central bank can only create inflation by devaluing the Swedish currency. Okay, that's something that the governor of the Swedish Riksbank really hopes for, and that we will pay more for importing goods from abroad. That makes inflation a bit higher. That's favorable for him, but not for 10 million people. But he doesn't care. But what happens is that our purchasing power collapses because of the great devaluation of the Swedish krona. And of course, that's nothing new. I mean, during my lifetime, we've seen it collapse every year. When I was born, the Swiss franc costed 1 Swedish krona. Now it costs close to 10. So no real surprise that we don't go skiing in Switzerland anymore. But congratulations to Switzerland. I met some of you nice people out here. It must be really cheap for you, and I hope you're going to buy your colleagues some drinks tonight. But what happens now? What happens now when our currency collapses and our purchasing power drops is that I usually buy this wine, Yarden, from Israel. Quite a good wine, but it's becoming really expensive for me because the Israeli shekel is going this way and the Swedish krona is this way. So what will happen now, you know Molly and my wife, and of course we will shift now to this Bulgarian wine. She doesn't know it yet, but that's what we, because we can't afford anything else. And what happens if everyone shifts their consumer pattern from buying these nice wines to the Bulgarian wine, is that we will have lower inflation. And so if we're lower inflation, then we must lower interest rates again. And then we have lower inflation. It's really difficult to act in this environment. And the one reason why all these central banks act like this is because they believe that they've found the key to success, an inflation target of 2%. But what if the reality doesn't match the map? Well, most central bankers prefer the map and not reality, unfortunately. Another example, I mean, this is my illustration of a gigabyte. I don't know how a gigabyte looks like. Sven is laughing. Does it look like that?
Perfect illustration.
A perfect illustration of a gigabyte, okay? Will a gigabyte rise in price by 2% next year? No, probably not. And the same goes for so many different things. But when you ask the Swedish Riksbank or the European Central Bank or the Federal Reserve, what about internet? Hasn't internet changed everything and made this whole inflation targeting regime obsolete? They would say, nah, internet only has a one-time effect on pricing. Okay. A one-time effect. What are you talking about? I mean, 20 years ago, when we got the internet, or 25 years ago, we started to compare prices on goods. When you're buying a new washing machine, you could compare pricing. And that sort of course, dragged down the whole price level. Then we started to buy things online, you remember? And you could buy sort of commodities. I remember when I bought my first pair of contact lenses. Okay, what happened with contact lens prices on the high street? Obviously, they were here, and the online price was here. They were forced to reduce that level and come closer to the online price of contact lenses. Now you buy glasses online, which is quite simple. It's 1/3 of the price from the high street. What will happen with the price on the high street? It will decline. And this is just areas after areas. Inflation is completely dead, but unless or until the central banks realize it, we will see low rates until it sort of collapses. Because the bad news is that monetary policy systems are only changed after it has collapsed. That's the main sort of message from an historical angle. Depressing it is. But it also sort of creates philosophical questions with negative rates. I mean, companies now pay negative rates in many countries across Europe. They've done it in Switzerland for quite some time. Denmark is facing it, Sweden facing it. Many countries now where companies face negative interest rates on their account. Usually on amounts above 2 million euros. That's where you pay negative interest rates. So in essence, you pay an interest rate to have money on your bank account. That sort of changes the whole system of what should you do with your money and how should you live your life. If you have a negative interest rate, well, what happens to, a cash card, like if you're buying a train ticket here in the southern region of Sweden, you know, you have those cards that you have in most countries. You put in your 50 euros and then you can go on a train ride and there's 0 interest rate on that card. But 0, that's a new +5. 0 is really good. So my guess is that we will see many, many people from Switzerland now, and I think you from Switzerland, you should buy some of these cards. And then you place all your Swiss franc on these cards with 0 interest rates. It's still only available in Swedish krona, but still, you get my point. But also, if you get an invoice, I mean, if I get an invoice here to my little house in Abbekås in the southern parts of Sweden, there is an even further southern part than this. Anyhow, you get an invoice saying that you need to pay this bill before the 1st of October. That's usually the case. You need to pay it before, you know, a couple of weeks. But in the new world, it should be the complete opposite. You're not allowed to pay this bill until maybe January or February. And if you promise that you will not pay this bill until 2023, you get a discount. Because it's a terrible business for some of these companies. If they're sending an invoice to a client and they have a bank account, they don't want their money. But it also raises the question of something like this. Out of fashion, cash out of fashion, apart from Germany. That's because the Germans are clever. And I mean, think about it. This costs 10,000 Swedish kronor. If you have a quick calculation, if you have minus 0.25 on your bank account, if you have 4 million Swedish kronor in cash, after 1 year, you can pay that device, the safety device. So that's probably good business. So my main recommendation to you is, of course, you go and buy these cash cards, and you buy this, and you start to make sure that your clients will never, ever pay your bills. And of course, the Swedish central bank governor claims that we are not getting poorer. Thank you, Stefan. Ingves. Now I'd like to focus more on global megatrends. One of the main reasons why I wrote this book is because I think that we tend to focus so much on all the negative aspects in life. There are negative aspects, there are problems. We're addressing some of those issues here today, very importantly. But I've just come to realize that so many people think that the global economy is about to collapse, despite the fact that it tends to grow. I mean, the main global megatrend is that the global economy is growing. It has done so every year, apart from year 2009. That's when global trade took a bit of a break, and then it has accelerated again. So it's a good bet that the global economy will be bigger next year than it was before, because it's usually that's the case. So you should be taking risks. And another global megatrend is that the emerging markets are taking much larger market share. That's nothing new, but it will continue. And I find it so optimistic and positive when traveling across Asia, meeting these companies. And as I said in the introduction, Vietnam is my favorite place to be for many different reasons. One reason is the ambition I find amongst these students, and especially Lee, coming back to her. But also the fact that Vietnam, they witnessed 40 years ago Japan, South Korea taking off. 20 years ago, China doing the same journey. And now they realize, well, maybe it's quite good to avoid the worst effects of communism and maybe introduce some kind of market economy. And when giving the people that kind of freedom, things happen. And that's what's happening today. and it changes the society completely. Almost 100 million people, and great entrepreneurship. You can even get quite a cheap haircut on the street. Another great global megatrend we're addressing here today is, of course, sustainability in all forms. And that's why I'm so happy to be here today and to, if it doesn't sound too pretentious, to actually be part of the solution. And again, I find it so interesting when talking to these students in Vietnam, the young people, and think about it, they are still poor. They don't have the iPhones, they don't have the things that we already have and our kids have had for 10 years. They are addressing these issues. And again, with GDP per capita around 1/10 of Sweden's and 1/10 of close to European average. So 1/10 of European GDP per capita, and already focusing on clean air environment. Very, I think, enthusiastic. Another example, I think, Connie has told us about where we can make a difference, and business leader can make a difference. We as consumers, we can make a difference. I think one good example of where people actually make a difference is when Sven and I were in Vietnam in May, and I was moderating a debate, Sweden, Vietnam, 5th year of diplomatic relations, as I said in the introduction. And we had Swedish delegation here, the Swedish prince over there, that's me. Here are the CEOs, here's Sven. And then we had the Vietnamese delegation here, and the Vietnamese Minister of Trade, and the Swedish Minister of Trade, now the Foreign Minister, actually from Helsingborg. My key point here is that the CEO of IKEA, Torbjörn Löv, he was addressing the audience with the Prime Minister. Everyone was sitting there, 400 people. And he said, well, you know what? We manufacture almost all IKEA bags in Vietnam. And you know, there's only fantasy is really sort of taken off here. You can do whatever you want with an IKEA bag. But anyhow, we're producing them here, but we need, as of right now, we need to manufacture them with recycled plastic. So you better fix this, Mr. Prime Minister. And the day after, we could read in Vietnam news, PM calls for joint action to deal with plastic waste. That's how you can make a difference. And IKEA is serious about making a difference here. Very good. Another global megatrend. We're getting older. More people getting older and even fatter. Again, I like healthcare. I like elevators as well. I know the CEO of Latour is probably enjoying this because he owns an elevator company doing 2 elevator companies, of course, but one of them doing elevators to a normal villa. So now, you know, you have your house, you know, 2-floor house maybe, and then you can put an elevator on the outside once you're getting older and have less mobility. And excellent, yeah. A global megatrend, but elevators in general, I mean, urbanization, we're getting older, we're getting fatter, elevators, that's good. And healthcare, of course healthcare. I mean, the US spends now 19% of GDP on healthcare. 19. When it was up at 15, you said, oh, that's really high, now they will stop. No, no, no. GDP is growing and they're spending even more as a proportion as a share of GDP on healthcare. Fascinating. China, 5% of GDP on healthcare. India, 4% of GDP on healthcare. Now, will India and China grow over the next 10 years? Yes. Will they spend more on healthcare? Yes. Will they spend more on healthcare in relation to GDP? Yes. So that sector is really interesting, I'd say. Then it comes down to things that we've talked about for many years. Machines, robots, nothing new, accelerating, changing the environment in many different aspects, reducing inflation, because after all, it's quite difficult for us, us, the losers, with the wage, because our wages are not going to rise as much as for the capitalists. And money comes cheaply, money for sale, still is the case, will prevail as long as this monetary policy system is still in place. And it will be in place for a long time. We will face low rates for an incredibly long period of time until we realize that it's completely crazy to maneuver with a target that's not really in line with reality, because inflation is probably dead. But it also sort of comes up with a dramatic and quite pessimistic pessimistic consequence that it's more fun to be a capitalist than to be a worker. So all of you who have paychecks, resign and buy some shares instead. It will be much more interesting to be a shareholder than to be a worker, because money comes cheaply, globalization, robots, internet, digitization, or you just keep your jobs and then invest. But because I think the return on equity will be really good for a long period of time. That doesn't say anything about the equity market tomorrow or this week or the next month, but the equity market for the next sort of 10 years. I think the return on equity will be quite good because of the fact that costs are being reduced. Partly because our salaries will not increase the way it has, and partly because money comes so cheaply from central banks, affecting the whole financial system. So my advice to you is to be long-term and buy shares. Connie mentioned the pattern, the consumer pattern of youngsters, where you don't necessarily need to own a commodity or a bicycle or a car, as long as you have access to it. I think it's so interesting to see this pattern also within the industry, where more and more companies realize that you don't have to own everything. You can rent things, and that's not just because you want to do good, because that's one of the consequences. You do good, but also because it's a rationale. It's relatively clever from an economic perspective. So that trend will probably continue. I have many different trends: surveillance, urbanization. Coming back to my favorite trend, the leading role in 2030. Who will it be? And as I said, Asia, probably Vietnam, could be something else. Vietnam, probably. A woman, definitely. Majority women in universities in Asia, as of course in Europe and close to in Africa as well. So women will take over, and the whole debate now about making sure that women are represented in boards, it will be the other way around in 20 years. Because this will be her day of age. And I think when looking at it from this Vietnamese angle, coming back to my favorite person, she is by far the most interesting person in the world right now, because she will dictate what we are thinking about in the companies, or should think about, because she has her aspirations. Her dream is to go to Paris. I find it so fascinating because coming back home, I met with a friend of mine whose kids said that, well, Dad, now during summer, please, can't we stay at home? That's terrifying. That's really terrifying. And it makes me really wonder. And looking at the 7 wonders of the world, going from Georgia over to Israel, Vietnam, the island of Okinawa in Japan, what are sort of the main characteristics? Well, they still remember hardship. They still remember a time when everything was not as nice as it is today. And I think in parts of Europe, definitely in this place, we've forgotten all about that hardship. And our kids prefer to stay at home during their vacation. Lee does not prefer to stay at home. She's never been abroad. And her main ambition is to go to Paris and see the world. Please.
Yeah, I can start with a question. So it's an interesting this you mentioned with the negative interest rates. So that basically, if I understand it correctly, would mean that money is basically both an asset and a liability at the same time, which is, I guess, a new concept. So if that's the case, what do you think is going to be? So if I work and why do I do that? Even is a question that people would ask, because the more I work, the more liabilities I get. So
exactly.
So how is that going to affect the society as we know it?
I know, and you can see the nervous look of your CEO right now.
I was a bit.
That's the philosophical issue you need to raise on a Friday night after a couple of drinks. And think about it. I mean, the philosophical impact of negative rates, because we're used to saving is good. No, not anymore. Saving was good. So it really changes everything. And I think our kids or grandkids, in 20, 25 years, they will write those essays at the university or the PhDs about the crazy days back when Dad was still around. That's what they will do. Because it's crazy. 25 years ago in Sweden, we had an interest rate of 500%. That was crazy. This is almost as crazy as that, because it changes everything. But I guess the key question here is, how will companies react? Back to you, Sven. I mean, if you can borrow money, not with a negative rate, but you have very limited borrowing costs at Nederman, will it make you more interested in acquiring growth?
It should be.
Yeah?
But then we are also a generation that has been through and seen the difficulties in 2008, 2009, where we are sort of scared of coming into the same situation. I think that is also influencing the current situation, especially in Europe and US, where we are not investment. It's a tragedy. It's very cheap to invest, but the investments levels are very low, and thus the productivity is actually declining in Europe. Think about that. It's declining in spite of the fact that we have all the new technologies coming up. This is dangerous.
Or at least the measured productivity.
But but if we would say, yes, it's cheap, we should borrow more. But then again, what will happen the next crisis and so on. So it's...
But it's interesting because, going back to the financial crisis in 08 and 09, people got really scared, of course, and then things turned around and better times. And despite the sort of good business environment, CEOs have been very conservative and not investing the way that they used to do in a business cycle upturn. To me, it's quite optimistic, because it says something about the possibility that if we're now heading for a business cycle downturn, profitability could be quite high and not collapsing the way it did way back then. I'm sure Anders Borg will get back to that. Please, do you have a microphone over here? Please, here in the aisle.
I'm no economist, so I'm a bit curious. We have heard that we will still have growth and we will have zero inflation. What does that mean? What does money end up?
How do you mean?
If we don't have our pay raises, but we still have growth, so we create new wealth, but we don't get it in pay, so where does it end up?
That's also a philosophical question, yeah. But I think, Growth, yes, in terms of global growth not being negative but above zero, and limited inflation, so lower nominal growth, lower growth in sort of in euros or in dollars from that viewpoint. But can we survive that? Yes. I don't think we're heading for a global recession. I don't think so at all. The most severe recessions are financial recessions, combined with the banking crisis, the one we had in late 20s and in 2009. Those are the severe crises. But a business cycle upturn usually doesn't sort of die of old age. It dies of a catalyst, something that happens. A rise in oil prices, and of course now we had the 10% up in oil prices yesterday, but that's nothing really from a macro perspective. And then we can have central banks raising rates. That was usually the case. Not anymore. So I'm thinking about more of a sort of a lackluster global growth environment. Lackluster, but no recession. We will survive. I promised the organizers that I should end at 12:05 because then you will make sure that you will have lunch on time. And I think it's exactly 12:05. That also means that we should be back here at 1:15. But before that, we also want to show a movie.